Hello, everyone. I am Celeste Barr with eXp Realty, and I am joined by Mike Rundell with Success Lending. I met Mike about a week and a half, 2 weeks ago, and he was presenting reverse mortgages to the group. And the audience probably didn't find the detail as incredible as I did because I could tell that Mike knew his product. He knew reverse mortgages. So thankfully, Mike said yes to coming and letting me interview him today. So I am going to start with you, Mike, and maybe you could tell me just quickly a little backstory of how you got into this business and how you focused on reverse mortgages.
Hi, Celeste. Thanks for having me. I got into the industry almost 5 years ago, 5 years ago in July. The company that I started working with was a reverse mortgage niche loan company. And I had known the owner for 30 years, and they asked me to come work with them. And at first, I was reluctant to do reverse mortgages because I had heard all the things that everyone else has heard, how they're bad loans, people lose their homes, how you're swindling old people. And as I got to know some of my clients and hear what they needed, I found out what a great product it was.
Fantastic. So with that said, I'm going to ask you the simplest of questions. Can you tell what are some of the main elements of a reverse mortgage? What should people be thinking about? What's important?
So a reverse mortgage is kind of what it sounds like. It's like the opposite of a regular mortgage. Regular mortgage, you have a lien against your property and the interest accrues daily, and you pay that interest with a little bit of principal at the end of each month so that that total goes down. And a reverse mortgage, it's the same thing. The interest accrues daily, but you do not make a payment. So that at the end of each month, that interest is added to the principal and your loan grows. So that's the basic
So,
tenets of a reverse mortgage. Now, that people that qualify for it are people that are for a government loan over the age of 62 and for a proprietor loan over the age of 55.
so what does that mean, a proprietary loan? Or am I saying that wrong?
You're saying it right. Proprietary loan is a loan that is covered by investors, and usually it's for a more exclusive clientele. So it's usually homes that are over, let's say, $500,000 or higher to be able to get equity out of their home at an earlier age.
Okay. So they do have a program that allows someone to start at age 55.
Yes.
That's interesting. I did not know that. All right. Well, with that said, we now know we have an age requirement. We have a house that has to have some equity in it. But I think you mentioned you can also use a reverse mortgage in a different way, which would be to purchase a home. Could you highlight how that works?
So in general, again, as you had said, that you needed to have a bit of equity in there to be able to draw money out. A lot of people, once they reach retirement, they retire, they have some money saved, but they're not working and they're very limited on what income they can have. They could potentially use their equity in their home to draw out and use that as a purchase or a down payment on a investment property or to live off and use their expenses. So they can use the equity that's in their home. That equity is based upon their age and the interest rates. So the older they are, the more they can get out, and the higher the interest rates, the lower they can get out in terms of equity. The lower the interest rates, the more equity they can get out.
So if I was a buyer and I'm buying a home and I want to use the reverse mortgage concept, I have to be 62 years old.
For the
And what
government
else
one,
do I need to
yes.
have for a government loan? Okay. Well, you keep saying that. What does that mean to me? Is that an
So
FHA
it's
mortgage?
the FHA for the reverse mortgage is called an HECM. So it's comparable to the FHA.
A
It's a
HECM.
loan that's backed by the FHA in terms of its insurances. There's an MIP like there is for the FHA purchase. So it's
Okay.
very similar. It just, again, they don't make payments for it. So as long as they have enough money to put down, let's say they're going to need at least 50% for most people that are age 62 to be able to put down on their home. They can be able to buy a home and then not have a payment going forward.
Okay. So they have to have money coming in. They have to come
Yes,
in 50% or more.
or more.
Okay. Are there any other things that I should know about if I'm a buyer and I'm buying a home with a reverse mortgage?
Well, the nice thing about reverse mortgages is that the qualifiers are a little bit easier. So in a normal home, if you're buying your home, you have to have at least double the income of your debts. So you have to be able to you have enough income that only about 50% of your debts can go to of your income can go to debts. You have to have another 50% over and above that. For reverse mortgages, it's dollar to dollar. As long as it's $1 above your debts, your income can secure your reverse mortgage.
Wow.
So the
Wow. Take that
qualifiers are
in.
much easier.
I think you're somebody I should know. And I do know, and I'll use this as my own experience was listening to a reverse mortgage presentation. And their conversation with my folks was that they wanted to emphasize some form of return on your money over time. Can you talk about that at all? What does that mean?
I'm not sure what they're referring to, but I think that what they're referring to is if you take the money out and keep it in a line of credit, you can earn whatever the interest is. So, interest rates have been near seven. And if you have a line of credit through a reverse mortgage, that means your line of credit was growing it by 7% annually. So, versus taking that money and putting in a savings account where you're getting 2.5 or 3%, it would grow a lot faster in this line of credit. I think that's what they were referring to.
Maybe that's what they were referring to. Here is what I know. I know that there are people who would love to stay in their current home and their income is not keeping up. Whatever income they have is not keeping up with what's happening with inflation. What are the risks of using a reverse mortgage on a house? In other words, today I have a client, they're both over 62. They're interested in possibly researching reverse mortgages. What's the downside if in the future they say, we want to move?
So the downside really depends on the environment and where you live. So if the value of your home is going up by, let's say, less than 7% annually, okay, then the loan will probably outstrip what the value of your home goes up in. If your home is going up by more than 7%, then the value and the equity in your home should be keeping up with the growing loan amount. So it really kind of depends on the area. If you live in a place where the values don't go up very much, when you do sell your home, you're going to have a lot less equity when it's over. If you live in a
Okay.
place where the prices of the homes are going up and up and up, then there's not as much risk in terms of losing equity in your home.
Boy,
Does that
there's
make
so many
sense?
concepts there. I almost want you to repeat that, but I think I could probably replay this video and understand it one more time.
So what I'm saying is that right now, like when you have a mortgage is about high sixes or 7%. We'll just say 7%. So if you have a home that you bought for, let's say it's $100,000, if your home is increasing in value by 7%, which is $7,000 a year, then you are keeping up with the interest rate of the loan. If your home is going up by less than 7%, that means that you're not getting as much equity as the loan is growing. So the loan is growing faster than the value in your home. If your home is going up by more than 7%, then your home is surpassing what the loan is doing in terms of interest rate. So that's basically what you're looking at. There are homes that are going up by 10, 15% annually in terms of the increase of its value, and there's ones that are going up by 3. So it really kind of depends on the area.
Can I expect that if I am a person who has what we call grade A paper, so my credit score is 720 or above, what kind of interest rate? Are we talking about just a regular interest rate right now of 7%? Or is there any way that I can influence my interest rate on this type of loan?
Unlike the forwards, it's not influenced by that. Ultimately, as long as you have a credit score that for most companies is 620 or higher, everybody gets the same interest rate.
Okay.
So
And what kind of cost is this to get a reverse mortgage?
um, So when you're saying costs, I mean, there's going to be taxes, there'll be, county, state taxes, there'll be title fees, just like every other mortgage.
Okay, are
So,
there other fees involved that I should know about?
probably not. I mean, there's, origination fees in every mortgage, so that'll be in there as well, and appraisal fees and credit report fees. They're all pretty much the same.
And how about this? What if in the future interest rates go down? Let's say they go down by, I don't know, by half, or not half, but like maybe I'm at 7 now, maybe they go down to 6.5, or maybe they go down to 6. Is the interest rate at all adjusting, or is it a constant?
So most companies right now are only offering adjustable rates. So as the rate goes down, you'll benefit from it.
Okay,
They were offering fixed rates, but the rates had changed so drastically that a lot of the companies kind of put a hold on offering fixed rates.
okay. And then with that said, how long does that process take to get a reverse mortgage in place?
I would say, you're looking at 45 to maybe 80 days.
Okay. And
So you're looking at a month and a half to 2.5.
is there anything specific that you're looking for from the homeowner? Is it what they currently make, or is there something else?
In general, there's 6 or 7 pieces of information. They want to verify who the borrower is. So they'll ask for the
Mhm.
ID and the social security number. They'll want to verify income. So they'll ask for the social security award letter and a bank statement showing it going in. They'll look to get credit to see what the expenses are for the house and the borrower. And they'll look at the property tax and homeowners insurance. And based upon that, they'll come up with what's called the residual income factor and see if the person qualifies for the loan. And again, it's dollar for dollar.
Okay. I think I've probably vetted as many questions as I can think of to ask. Did I miss anything?
Um, I don't think so. I mean, I think that in general, one of the things that we talked about is, real estate agents looking for ways to be able to get people into their homes. For people that are struggling with income and debt, this helps people be able to get into homes that maybe if they have equity, they can sell a home and be able to get into it. It helps them to get into a home easier. But, for people that are looking to retire, I think that people that have personal finance people, they should be looking at, again, ways to extend their income. So being able to take the equity out of their homes, potentially putting it into an investment property, they can have some passive income and be able to increase their earning power in their retirement years. I think both of these people should be paying particular attention to a reverse mortgage.
Okay. And by the way, I really want you to know, I seriously appreciate all you know, because I know enough to make myself dangerous, but
So,
I also know I don't know nearly what you know. And our conversation a couple weeks ago made me aware that this is something we should have out there. We should be telling people this is an alternative, because I would guarantee you the concept of a reverse mortgage has had a very bad rap, and
mhm.
that's just not fair. It's not fair.
Well, I think that, I mean, like in every field, there's people that have earned that rap. I mean, there's people out there who are not honest and not forthcoming to their clients and can put certainly a bad rep out there. You just have to make sure that the person that you're talking to understands, like, whenever you are buying a home, you are in charge of the whole process. Everybody works for you. The attorney works for you. The real estate agents work for you. The loan officer works for you. And make sure that you're getting all your questions answered and make sure that you're comfortable with all those answers. I think that's really what's important is make sure that, like, we're all doing our job as fiduciaries to make sure we're taking care of the best financial interests of the borrower. And I think that the borrower needs to make sure that they're comfortable in this confusing and even sometimes scary process, that they have the right people on their team.
Couldn't agree with you more. Seriously. I listen and I'm thinking that is what I would have answered. So thank you.
No
I
problem.
want to also tell the audience that's listening, this is a very valuable product that is not getting the sunshine, the light that it should. And for anyone who is listening, there is only one thing you need to know, and that is in the description of this video, there will be contact information for Mike and myself. Either one of us would be glad to help you, and we would help you get to the next level, whatever that means. The other thing I will share with you is eXp Realty has all kinds of benefits by working with Mike's company, which is Success Lending. So if you say, I'm not interested in a reverse mortgage, that's okay, because I'm thinking of doing it my own way. You can still take advantage of us because Mike is here as your confidant and he will guide you to the best program that's available. So again, his information will be in our description in this video. And I think one last piece of advice that I would give anybody watching is that if you know someone who could take advantage of this type of mortgage, please forward this video to them. Give them the opportunity to decide for themselves if this is something that they could take advantage of. Would you agree with me, Mike?
Absolutely. I think it's something that people should look at, especially as they get to retirement age, of how to plan their retirement out. This is definitely should be a big part of it.
Huge, huge part. I mean, it's almost like we're giving them a gift. People
Yeah,
don't
and
realize the gift.
ultimately, information is everything, and it gives you a way to plan out your future. And again, things are not going to go according to how we plan. So having this in the back pocket is really something that could help out them, their parents, their aunts and uncles, grandparents. So everybody out there could benefit
Yeah,
from
and
it.
there's no restriction on how old you need to not be. Like,
Yeah.
if your mindset is, well, you shouldn't do it after a certain age. No, that's not so. That's just the opposite. This is a wonderful opportunity for you to alleviate the stress of having a mortgage payment.
Yeah. And I think that again, involving other people in the process helps them understand it and be able to help out their parents or grandparents make these decisions and make sure that they're working with the right people.
Definitely. There's smart money to be made here. So just take a moment and listen again if you have to, and even call us. We'd be happy to talk. So with that said, thank you so much for us, this time together, and we will have another video for you in just a moment.